Hello, good morning and welcome to today's episode of True Potential's Morning Markets. Now, if we cast our minds back to the past 24 hours worth of trading activity and starting over in Europe with equities, they closed the day down roughly 1% yesterday. And if we think about the domestic market in terms of the FTSE 100, that actually outperformed Europe, closing down flat 0%. If we think about the sectors that underpin the FTSE, the strength actually came from the utilities sector that closed up 2.1% during the day. Casting our minds over into the US, that followed European equity market performance and traded the day lower. But thinking about the different indices over in the US, it was those who trade on higher multiples or higher valuations that performed worse. So Nasdaq performing worse than the S&P 500, which performed worse than the Dow Jones. Thinking about or putting some numbers around that performance, the S&P closed down 1.15% yesterday. And if we think about Asia once again, that followed the tone of the US, with Japan down 1.8% and China closing down 0.9%. Now, if we think about other markets in terms of sovereign fixed income markets, those actually provided the role we would like to see within a multi-asset portfolio, with bond yields falling, therefore meaning bond prices moving higher during the day. The US 10-year yield closed down 15 bips lower, and then if we think about the US 10-year gilt, that was 5 bips lower yesterday, and into open this morning came in a further 4 basis points. Commodity markets once again provided to be volatile, with oil down $2, which takes WTI, so US oil, to $102 per barrel, and Brent in Europe at $104 per barrel. European gas was higher by 3.3% following Norway's announcement of reduced supply given an incident that they've had at one of the gas fields. Casting our minds into currency markets, the theme of US dollar strength and also Japanese and euro weakness continues. US dollar Japanese yen pairs trading at 137 yen per dollar, which is a level we've not seen since 1998. And the US dollar versus the euro is now trading at parity, which is something we've not seen in the past 20 years. If we think about the DXY, which is the dollar trade weighted currency basket, that's at 108.5, so very strong US dollar that we've been witnessing. Thinking about news that we've witnessed in the past 24 hours, we've had the BRC, the British Retail Consortium, come out with the UK retail sales for June. That came in at negative 1.3%, which is slightly better than last month's reading of negative 1.5%, but missed estimates by a whole percentage point. Digging into the underlying reasons behind that, there was quite a bit of weakness within the online sales, down 9% on a year-on-year basis, and that's been driven by a reduction in higher ticket item purchases, and the BRC have contributed that towards the higher inflationary prints that we've been witnessing so far this year. But if we think about food and drink sales, they're actually higher by 1.5% during the year, and that's been driven by the Jubilee weekend that we've had this year. Thinking about other important data points that we'll be seeing this year, it's Q2 earnings seasons for US companies in the S&P 500. So over the next coming weeks, we'll start to see more and more announcements. Come Friday, we'll have seen most of the financial sector within the US report, so they'll provide updates on the operating performance during the second quarter, but also importantly for investors, forward guidance, so things to expect going forward. Thank you for watching today's episode and have a great day.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.